Well, good evening, everyone. Welcome back to the channel. So I have a really special video for you all tonight. This is one I really enjoy doing, one that I feel like I actually add a lot of value and can hopefully mold and teach some of you all on some good examples of what you might want to do in your personal financial world. So I've been waiting to do this one for like a month or so because the way the market was last month, uh, I wasn't quite at the milestone I wanted to be at to do this video. I was waiting for this account to like cross a certain threshold. Now that it has, um, I'm doing a portfolio update to one that I did basically in January on my main 401k that I had, my biggest one. So welcome to both of you. Welcome, Pay the Piper. I missed the trades being posted in my Discord, by the way. Hopefully, you all can keep doing that. Oh, somebody made it inverse. So, all right, this should be a really good video for you all. So, strap yourselves in. This should be a fun one. Okay, so today, or actually yesterday, so they call it 401k, but I was wanting it to actually hit a balance of like 401 to like match like a little bit of a joke 401k. Well, we had such a good day for the market yesterday, it actually surpassed that. So I figured I would go ahead and do an update on the account. So my investing style is very aggressive, I should note. One thing I should say right off the bat, though, there's no yield max in this account because these are all index funds, basically. So the bulk of this, which I don't have in the spreadsheet, but I can pull up very easily. I'm in, so I'm, like I've always said, majority index investor and real estate in terms of the bulk of my net worth. The yield max stuff, I keep it to the 10% bucket. And I consider that like speculative. If I had it all to do over, I would never invest in Tesla, of course. I might do some of the other ones in that bucket, but definitely not Tesla. So this account is in 5 different index funds. About half of the account is in a large cap growth index fund. About a quarter of the account is in the S&P 500 index fund that the plan offered. Um, a smaller portion of the account is in the common stock fund for the company that I worked at when I started this account. And then I'm in a large cap value fund, which has some of the like large cap dividend stocks and stuff like that. It's a little bit safer one, but there was a year that it did outperform the growth one. And then I'm also in a small cap fund with a like 11% of the total account is allocated in that one. So 5 funds, the bulk of it large cap growth, and that one has absolutely been on fire. That's a lot of like the tech companies and generally large cap companies that we know very well. So my investing style in this one, when I started at my job, like right out of my undergrad program, I figured all this out. I basically taught myself not to be in the target date fund in the 401k. And I'm not saying any of this as like advice. I mean, take this with a grain of salt, take it for what it's worth. You may or may not think I, know my stuff by seeing this, but we'll see. That's up to you. Um, like I say, it's not a home equity line of credit for 400,000, but personally, I'd rather have this. Um, but anyway, so what am I getting at? Oh, the target date fund. So I figured out early on the target date funds are pretty much crap. They underperform the overall market. So I don't consider this aggressive. This wouldn't be everyone's investment style. Like if you're older, if you're like in your 50s or 60s or close to retirement, you might want to be a little bit safer. This becomes aggressive. I feel like this can bite you like when the market drops because I don't have this insulated for like downside at all. And you'll see when I go over the year 2022, um, while this basically made a full year salary last year, it lost almost a full year salary the year before in 2022, or almost 2 years ago now. But we're kicking butt this year, of course. We're on pace to outpace. We're not even halfway through the year, so we're on pace to outpace what we did last year in terms of total rate of return. So this is almost like having another job. The only thing is, because of the tax structure of the account, I can't touch this until I retire. Well, I could, but I would get busted in taxes. Let's do some comments here. Atlanta, I like it. That's a big city. What are you going there to do? Anything in particular, or like, are you seeing something, or um, like I know Braves games are cool. It's a cool city. Like they have a cool aquarium and whatnot. Yeah, really cool city. I've been there several times. Come to my Discord. I am in your Discord, but I like it in mine too. Thank you, thank you. So this should be, like I said, one of the more valuable videos that I do. Oh, that's right. You're a hardcore gamer. Nice. So you're like meeting people you play with online in Halo. That's cool. Did I tell you what I'm doing next month? I'm actually going to the New York Stock Exchange. I don't know if I've actually broke that news yet, but so Jay invited us to the New York Stock Exchange for something similar to what another channel did like a month ago. And it was completely out of the blue. Didn't expect it. Let's see. Why BTC and Maxi will end up being best income and growth next 7 years. You think so? Um, I don't know. I mean, this percentage of, or this portion of my investing is not in yield max or any dividend funds at all. It does get dividends. For those of you that absolutely love dividends, I should point out it does get dividends. But yeah, more details to come. Um, so, all right, dividend lovers, this account does pay dividends, right? It pays about 300 or 400 a month. I think I didn't update one, but because it's in a common stock for where I worked before, see this column over here, column F. This is the dividends that it pays. So I've been building this for some time. And I would say in 2016, I started aggressively contributing to this. So how do you get how do you get an account? How do you build an account to this level? This is the coaching that comes into play today. So for me, I started maxing out my 401k in 2016. Once I figured out that target date funds were crap, once I figured out that, oh, that like you hear only do what your employer matches. No, no, no. The way I look at it, max that shit out. Um, at first, it was hard. I made less money at the time, and with a mortgage and all that, like it was hard to max out, but it pays off. Like you'll be like my advice to anyone, if you want to set yourself up in life, like just for like you want to majorly, like you know, make your mark and set yourself up for success the rest of your life, you have to take a period of time in your life where you cut a lot of stuff out and you just focus and you just grind on what you're doing. You've got to like put in work and stuff and work hard, and you got to focus on the grind. And then once you establish yourself, then you can really start to see the fruits of the labor, so to speak. Um, but I recommend that to everyone that they do that. Not everybody has the fortitude to do that. A lot of people out there are just kind of living for today, and they're like, oh no, they're only looking at what's right in front of them, which I get. I mean, I'm getting that way now, so I'm glad that and I'm not doing this video like to brag. I'm trying to share what I know with all of you all. Um, but that's basically what I had to do. And the younger you do it, the better off I feel like. So, what I really like about this account is that if you look a year ago, I mean, this account has clearly grown by over $100,000, and I'm not even contributing to it anymore because I don't work for this company anymore. So, I haven't actually contributed to this account since 2022 when I left this job in October of 2022. Now, the downside to this aggressive investment style is in the year 2022, I lost 60 grand in this account. But on the flip side, the year after, it made almost 83,000, well, 82,395. Percentage wise, that's 33%. And then this year, we're already kicking butt. I would have hit this in March, actually. Well, you see, it crossed 400,000 in March, but April was a disastrous month when the Fed decided they weren't going to lower interest rates. And then the account lost 17 grand. So you can see there's some wide swings in this account. So this account can lose anywhere from 15 to 20 grand in a month, and also gain 15 to 20 grand. If I look throughout the whole history, and I'm not going to go all the way back, but the maximum. Oh, hold on. Let me just highlight these. I guess I'll go to here. Um, so obviously, I'm not going to go the whole way because the smaller the account was back in the day. Let me mute Discord. Discord is driving me nuts here. Uh, maybe that'll work. Okay, so let's see. The um, the most this account lost in a month was almost 30,000. The most it gained in a month was over 30,000. So if you can stomach swings like that, like I want to say November 2023 was the best month for this account ever. And I think the biggest drop came in like either 21 or 22. Yeah, April 2022. So this account pretty much when I was still contributing to it, it had, let me close Discord. Discord's driving me nuts. So this account had a disastrous 2022. Um, so you've got to be able to, with this investment style, one thing I could have done differently, I could sit up here and say, well, I knew the Fed was going to cut interest rates. I saw it coming. Um, but I mean, I did see it coming, but I didn't shift into the stable fund. If I had it all to do over, I would have shifted like to the stable fund and avoided all this downside for the year 2022. This is the downside of this aggressive style without timing it and shifting. The same thing happened during COVID, actually, too. If I go back to the year 2020, well, here's the funny thing about the year 2020. Even though this account dropped in what was it, March of 2020? Um, let's see, March of 2020. Yeah, it dropped like 25 grand, but by the end of the year, and this is when I was getting my matching and stuff too. By the end of the year 2020, I was still up 26% in the account. So this account has had years that it did 26%, 38%. It had, of course, the year that it lost 20%. Last year, it gained 33.6%. 2019 was one of the best years for it, 31.97%. This year is going to be on fire for it too. So what's really cool about this, if I look at the bottom line here, the summation of all of the gains, this account, this is what's really awesome about a 401k between employer matching and between being in great funds and building an account like this. This account has made as much as I've put into it. So this column over here, this is the amount that I've actually put in since I've been working, maxing it out every year. This is what it's made. And this includes matching and all of that. So if you sum up all of these, oh, and by the way, dividend people, check this out. This is what it's made in dividends. You like that? Let me check something here. I exported this over from an Excel sheet. Actually, you know what? This column is not. I need to update. I haven't updated this column for this year. This should be 213,894.79. Let's see. 213. Whoops. 213, 894.79. 894.79. There we go. Okay, so these should all add up to the total we have over here. Pretty much within a little bit. There might be a minor dividend discrepancy I'll have to check out. Um, like I know this quarter because I threw this together for the video today. But I had it updated. I haven't actually updated it this year until today. So there was a dividend that got paid out here that wasn't counted here. But this has made over $6,000 in dividends on the one company stock fund. And then with matching and all of that, it's done really well. Um, let's see here. So if I go over here, let's see. So I track my rate of return over here, and in an account like this, the rate of return is really, and see, I have to update this too because the highest balance is actually today. It's it's what I showed in the screen. Let's see here. Oh, I have to hightail it out of here as soon as I'm done talking to you all. Let's see. I guess I can do this live. 405. The highest balance on record is literally May 15th, which was yesterday. So that's May 15th, 2024. Um, yeah, see, this isn't updated either. I'll have to update these columns. But anyway, moral of the story, I calculate percentage without matching factored into the denominator. For you math nerds out there, that should be at your level. This is the kind of work I do when I'm quiet and block everything else out. It was 140%. So the difference, when you factor matching into the denominator, it's 111% total return over the life of the account. Now, obviously, you could say if this was all invested in like NVIDIA or SMCI or one of those, I'd have like a crazy return and I'd be wealthy and already retired by now. This would probably be like 4 million instead of 400,000. But for a classic 401k account that's in index funds, I think it's done pretty good overall. So, and I was really inspired to do this because I keep seeing all this stuff about, home equity lines of credit for yield max and stuff like that, or for AMZY. So I'm like, you know what? And I did a poll. I'm like, would you rather actually have assets or borrow a bunch of money to make some income and have no assets? The way I look at it, like, I'm a fan of assets. Like, I'd rather, like, so I've been building this for years and I'm happy with the result of what I've been working hard to build over the years. Um, I like low debt. I like high net worth and having your own money to do stuff with, not paying margin, not paying interest rates. I want to collect interest, not pay interest. So, and if any of you all think I know what I'm doing, like, feel free to take my example because that's the way I see things. I'm somewhat debt averse. I know debt can be a great vehicle, but again, like I say, in an account like this, $30,000 in a month, like 10 years ago, if you would have told me I was doing that, I would have said you were crazy. I would have said, "Wow, that's amazing." Um, but yeah, so this is no yield max, no defiance, no rec shares, no roundhill. It's all index funds. So like I say, the bulk of my investments is what is considered boring on YouTube, but it's done the best for me. So okay, let's do some comments here. Let's see what else we got here. Pay the piper. You must have been late to the party. I told you already. I'm in large cap. I'm in S&P. I'm in small cap. I'm in my company common stock. Um, and I'm in a large cap value and large cap growth. Half of the account is in large cap growth. And then the large cap value, I'm in that one because it did outpace growth in like 2016, I want to say. So I keep a portion in that. Let's see. Dissector says amazing, right? How will this impact LeBron's legacy? Oh, it's directly correlated. I mean, that goes without saying, right? GameStop and AMC. I know I should have this in GameStop and AMC, right? They're about to run again. Roaring Kitties tweeting daily again after 3 years of silence. Yeah, I'll have to follow up on that. Let's see what you all say here. Setting up my grandpa funds. Would you pick SCHD or VYM? Very similar dividends. They're both good. We certainly love our dividends. So, dividend lovers, column F, knock yourself out. This account does get dividends, but they're like safe company common stock dividends. Do you have Robinhood for the 3% match? That seems like a great perk. I want to. Do yield max? Pretty sure that makes you a hater. What? I'm not a hater at all. I cover yield max. Like some of you, like dissectors, probably gets annoyed how much I cover yield max. So I'm not sure what you're talking about here. Do you have a day job? Some of us are living. I know. Aren't you doing that too? You haven't bought into the home equity line of credit line of thinking? Oh, look who's on. I don't think this affects LeBron's legacy. No, it's directly correlated. Let's see here. What other comments did I miss? Um, so did I tell you all? So the channel is going to New York to ring the bell on the New York Stock Exchange, June 21st. I'm flying in June 20th. So it's really cool. Got the invite a couple weeks ago. So I'll be there actually with Jay. And oh, well, there's going to be probably 50 of us on the stage. Like, I don't know if I'll actually be the one ringing the bell, but I'll be on the stage for sure. So I can go ahead and make that public now. Everything's booked. Oh, I didn't get the little, what do you call this? I'm drawing a blank. Once I do advanced math like this, my brain, there's no assurances that my brain's capable of anything else. Forward slash S means it's a joke. Okay. I figured you were joking. On whose behalf? Um, it's funny because the timing of it came after I started talking about return of capital and stuff. I won't say too much, but it's really cool. Like I'm excited about it. So on our podcast, two of us are going, one of us isn't able to go. Um, it's actually really cool. So I had to get the flight and stuff like that myself, but they are covering the hotel for 2 nights. But yeah, that's cool. I got to talk to you, by the way. So we've got to work on that collab at some point. Anyway, so I hope you all enjoyed this. That is the 401k video. There are some people out there that say I don't show my stuff. Correction, I actually do. And there's more to show. I've got my Charles Schwab that I could show too. So I hope you all like that. I hope that was informative. And yeah, working on it, working on it. Um, let's see, Coach. If you buy 100 shares of SPY, sell daily calls, you can make 80 to 100 in the 252 trading days. I know. I know. I have to spend more time. Like, if I was already retired, I'd probably be doing that. Just like these guys doing the wheel strategy that have quit posting the trades in Discord, which I'm a little upset about. But that's what they're doing basically, and I'm not able to keep up with it at this point. And I see all the money being left on the table. But anyway, for this video, that's going to conclude it. Thank you all for tuning in. Like, comment, and subscribe, and join the Discord for more valuable coaching and all of that. And we'll see you all soon. All right. Bye.